All right, so let's start with the big story that we're tracking on WION this hour. As the coronavirus pandemic has shattered the world economies, European countries are working on ways to counter the economic crisis that has been brought about due to the COVID-19 pandemic. The largest economies in Europe, such as Germany and France, have now proposed a $545 billion recovery fund that would offer grants to European Union regions and sectors that have been hit hard by the coronavirus pandemic. But the fund will also boost the efforts to create a coordinated European fiscal response to the coronavirus pandemic. The funds will be raised by the European Commission through borrowing in capital markets. The fund will be an additional top-up to the 2021 to 2027 EU budget. The grants will be paid back over a long period of time, and Germany would shoulder as much as about 27% of the funds. But there will be some conditions attached to these grants from the recovery fund. The grants will be based on a clear commitment from member nations to follow sound economic policies and also an ambitious reform agenda. The European Commission is to present its own proposal for a recovery fund linked to EU's next long-term budget on the 27th of May. But this proposal could face some stiff opposition from some of the frugal northern nations of the 27-nation bloc, such as Netherlands, Finland and Austria. But the announcement of the proposal has also pushed up the euro against the other global currencies and has brought down the Italian bond yields as well. And hours after France and Germany proposed the massive fund to finance the European Union's recovery from the coronavirus pandemic, Austria has insisted that any help should be in the form of loans and not in the form of grants. Now, Austria has said that loans can be paid back to sponsoring nations when the economy improves. All right, now to get us more insights into what is actually playing out in the European Union in terms of how it seeks to overcome the economic crisis, we are joined by Lucy Howe, our correspondent who is joining us live from Brussels. Now, good morning to you, Lucy, and let me begin by asking you this. This is a fund that's been proposed by France and Germany. How likely that it will find acceptance in the EU bloc?
Well, we understand that the proposal is being discussed by EU leaders today, and we also have a further announcement from the EU Commission President Ursula von der Leyen on the 27th of May, and that the proposal put forward by Angela Merkel, the German Chancellor, and the French President Emmanuel Macron has been broadly received and is not receiving a great deal well received and isn't receiving opposition at the moment from countries that you mentioned earlier, such as Austria and the Netherlands. Who had previously opposed the idea of mutualised debt. So this is a really significant announcement. Whilst it isn't a huge amount of money in terms of EU budget terms of 500 billion, it is the first time that France has accepted the idea of a joint debt mechanism, and that it wouldn't be issued to particular countries such as Greece in the past, or in this case Italy and Spain, whose economies have been hammered by the coronavirus pandemic. So it is being described here as a really good bit of European policy making, one that is likely to get the support of those countries in the south of the bloc who have been calling for the issuance of grants, not loans, which would pile debt on countries that are already heavily indebted, and rather that this is expenditure coming from a centralised EU level.
Absolutely indeed, and also people are now looking at the next level of this coronavirus pandemic. The first part was the health crisis, and secondly it will be the financial crisis brought about because of the lockdowns that were imposed to try and contain the coronavirus. How badly has Europe been impacted due to the COVID-19 pandemic financially?
Well, the forecast that we had a couple of weeks ago from the European Commission is dire. We're seeing, countries losing as much as 9% of their GDP, particularly countries in the south of the bloc like Italy, Spain and Greece. Those economies heavily dependent on tourism in particular, which, whilst there may be some steps towards the resumption of some normal travel over the coming weeks, it's going to be nothing like what it would have looked like in 2019 and 2018. So those economies are very much going to contract. Even more robust economies such as Germany are predicted to see a 6.5% contraction of their GDP in 2020, although there is predicted to be a recovery in 2021. So across the board, really, we are going to see European economies hit hugely hard by this, particularly the 19 countries in the Eurozone. So, yes, this is going to hit hard, but this 500 billion rescue package comes in addition to what's already been announced. So there has been significant steps by the European Commission to address the economic damage.
Absolutely, and also considering the fact that, in the aftermath of the coronavirus pandemic, first it broke out in China and then it shifted its focus to Europe, and within Europe it was in Italy. And now we are looking that Italy is slowly limping back to normalcy. For the first time, it has reported less than 100 days. For the first time since the pandemic broke out, and restaurants, cafes and also churches have now reopened the country. Talk to us a bit about what is happening in Italy right now.
Yeah, we've had a series of incredibly encouraging figures coming from Italy. Over the weekend, the death toll was 145, and as you say, on Monday, the death toll was lower than 100 for the first time since the lockdown was imposed on the 9th of March. There is sometimes a delay in reporting cases over the weekend, so we may see that number fluctuate a little bit this week. But, clearly Italian authorities are going to be happy that the death toll is finally starting to wane. At the peak at the end of March, we were looking at a death toll in excess of 900. On Monday, we went into a next phase of the Italian exit strategy where bars, restaurants and cafes were allowed to open, although with strict social distancing measures in place. We saw the reopening of some public spaces, churches, people able to visit cemeteries for the first time. Clearly, the tens of thousands of people who have lost loved ones during this crisis. We were hearing of Italians really being in a state of shock, huge relief from them that the very strict lockdown measures are starting to lift, that the death toll is starting to wane, but of course there are very real fears that there will be a second wave later in the year as the lockdown measures continue to be lifted.
And also one of the other things that a lot of people are looking at with a lot of interest is the fact that schools in some nations within the European Union have reopened. How comfortable do parents at this point of time feel to send their children to schools within the European Union nations?
Well, Italy, we know that schools won't be opening for some time yet. Spain is also said to be considering a similar move. But Germany, we have had schools starting to go back in the last couple of weeks. France as well. We had schools going back from May the 11th. Around 1 million pupils went back last week. There is definitely concern, particularly amongst French parents, about the potential risks of children going back too early. How difficult it is to impose social distancing with younger children especially. We know that in France, teachers are required to wear face masks and that children are being regularly encouraged to use hand sanitizer on their hands. But, there are clear health risks, but it is a crucial part of restarting economies, allowing parents to send their children back in order that they might be allowed to return to the workforce. So again, it's being done differently across the continent. The UK in particular is looking to make a decision on this as well, but it's a contentious issue and it is being done differently in different countries around the EU.
All right, we'll have to leave it there. Thank you very much indeed, Lucy Huff, for joining us from Brussels and getting us all those insights in terms of what is happening within the European Union at this point of time.